We have announced withdrawal of 2000 rupee notes. 2000 rupee notes, we have so far got back about 3,43,000 crores. Only about 12,000 crores or so are left.
You have said that the transmission is still not complete, while saying that the stance is withdrawal of accommodation that is maintained. So do you expect banks, so does RBI expect banks to further adjust their rates so that transmission is complete? And are you worried that a change to a neutral stance will dilute your resolve, will signal a dilution of your resolve to act on inflation?
You see, a change of stance to neutral will be on table when the situation becomes so. At the moment, the monetary policy, the rate hike is still incomplete. I have given the numbers in my statement. We have increased the repo rate by 50 basis points, but it has not fully translated to either the deposit rates or the lending rates of the bank. There is still some distance to be covered. So we would expect that to, align with the increase in the repo rate. And so therefore, at the moment, the stance remains withdrawal of accommodation.
But why OMO sales when liquidity is already in deficit? Do you expect the deficit? I mean, you have a figure in mind what kind of deficit you want to?
Okay, I would request everyone to just stick to one question. So, you see, liquidity is not in deficit. The liquidity over the last 2 or 3 weeks went into a deficit mode mainly because of advance tax payments and GST payments. So therefore, what was a part of liquidity went as payments for GST and payments of advance tax last month in September. Advance tax was in the middle of September and GST was around 20th of September. So therefore, for those 2-3 weeks, the liquidity became very tight. But overall, if you see, the liquidity is surplus. We have announced withdrawal of 2000 rupee notes, and 2000 rupee notes, we have so far got back about 3,43,000 crores, and only about 12,000 crores or so are left. And so 3,43,000 crores we have got back, of which, of course, 87% has come as bank deposits. The rest is, exchange of cash to other denominations across the counter. So there is a substantial amount of, therefore, liquidity which has built up because of withdrawal of rupees 2,000 notes. Government spending is also now picking up. The taxes came around 15th, 20th of last month. Government spending has picked up and will pick up. So therefore, that will also add a lot of liquidity in the system. And I have also said that in the festival season, the demand for currency will go up. So currency in circulation will go up. So that will sort of drain out some amount of liquidity. But overall, if you look at it, the liquidity liquidity is in surplus. So we have to be very watchful. That's why I have said we have to be active. There will be active liquidity management. We will be very watchful. The whole liquidity matrix has several moving parts. We will remain watchful, and we will undertake whatever operations are required from time to time. OMO sales is one which we thought would be required. So therefore, we have made a mention about it in my statement.